the problem is that I don't have it as a Gartley. So, and in fact, thanks for bringing that up, because the harmonic aspect of it is a good part of why I've got my rules going on here. So let's talk about the first bearish alternative for this rally. Okay, first off, we could make a second swing that's only 1.618 of the first swing and takes us to this 200 moving average, or around 10,390. That would be the first option. If we go down here, I think actually our level's a little bit even clearer. If we go low first of all, and we look at an hourly, this is where our options are, where we're just looking at where we're going to hit trouble and what it might mean. So if we just make an ABC correction off this low, like this, so 2 equal swings off this low, that would take us to, that would take us to 10,000 exactly. Okay, and that is kind of around, it's just a little bit less than 50% back. So an ABC equal measured move takes us to 10,000. If we fail there, we're still, in a downtrend, and we've just done a bit of mean reversion before we continue lower. If we fail a little bit higher at 10,115, which is the 50% of this drop measured here at Bitstamp, and let's in fact do it to Tether, because not everyone may have that spike. We'll do it this way. Then, so between 10,100 and 10,000 and 10,000 even is our kind of major bearish resistance. If we don't get past that 10,000 level, we're still really in a downtrend, and that's where and this bounce is corrective. So that's our first place to watch out for resistance. Where am I going to be buying against? I'm going to look for this 200 moving average to be support on a low time frame, and us to continue to push higher from here. So on a 15-minute, here we've got a little pullback. You can see this previous double top. Something like this and a turn higher would be quite bullish for me. So short term, immediately, that 10,000 area is going to be our first problem. Okay, now if we go up to a 4-hour, and we talk about where we go if we go beyond that, and we go beyond those resistance levels, well, if we, I need to go back to the daily, take these away. So we're going to zoom out here, and we're going to put our, if you look at the bits, the reason I had it on Bitstamp prices, okay, is because from this high to this low, as you know, we're bouncing in between the 61.8 and the 38.2 fib levels, the golden ratio zone, if you like. So from the 2017 high to the low in 2018 at the end, December, we're in between that 618,382 zone. And when you do that, the 50% in the middle is very often resistance. So a bounce from here that keeps us within the zone should really have as a first target back to that 50% level in the middle, and that's at 11,492. However, because this is a higher low, and if you apply some sort of harmonic pattern rules to this, then I think we get a little bit higher, and so I'm going to talk about it. So first off, let's draw this as a channel, a parallel channel, and we'll connect these lows. I know this is a funky way to do it, but it sometimes works, so bear with me. Okay, so if we clone it, then that's what our parallel channel looks like, okay? If we use the low values rather than the high values. Because if we overshoot, very often if you draw your trend line like this and you overshoot, it's to that parallel channel from the bottom one. Okay, so that's why I sometimes draw it like that, because that very often ends up being resistance. I know it's crazy. Okay, now this first rally that we had from the 17th of July to the 20th of July only went to 50% of this drop. And now it looks like we're making a higher low. Well, one of the harmonic pattern rules says, of all the patterns that you can draw, is if your first swing only goes to 50%, which means it can't be a Gartley, because if it was a Gartley, it would go to the 61.8 of this swing lower. Okay, if I put this on from here, high to low, you can see this was 50%. Had it gone up to the 61.8, we would be looking for a Gartley. Okay, anyway, I'm going to leave this on now, because I want to mark the 786 next as well. Okay, so the harmonic pattern rule says that when you do that, your first swing is to the 50%, and then you make a higher low, like an 886 retrace. What you're looking for is a bat pattern, okay? And the rules say that the next swing must go to at least 1.618 of this. So 1.618 means up here, doesn't it? So here's our one, but let's make it really bright so we can see it in blue. Okay. So if we rally and take out this 200 moving average and we make a new high, our minimum target is 12,245 based on that fib rule. Now, we also look at measured swings, that we measure the distant, we look for the swings to have a mathematical relationship. So if we made an equal measured move, we would just basically retest the highs at 11,173. But it doesn't line up so well on Binance. It lines up better on some of the other exchanges like Coinbase. This 1.618 extension of the first swing and this 1.618 projection from this correction line up around here, around 12,300, 12,400. If we add in a fib retrace level, so we'll do that as well, then we end up sort of getting a harmonic pattern kind of reversal zone. So if I put the, going a bit, here we go, if we put the 786 in, let's red line it, there it is, lines up there. Doesn't quite line up if we do the ABC, but then we're not looking at a pattern from there, is it? But let's see where that 618 is, because I never mind a little bit of confluence. Doesn't really line up. Okay, so from here, that would be our pattern. That's where the confluence is. Now, is there a pattern called that? There isn't. But I found that it's worked very well for me when I apply those rules. Now, if we extended a little bit, which Bitcoin very often likes to do, then we would extend to that 886 fib, okay, which I'm going to mark, and that gives us 12,681. So basically, this becomes, then it becomes a back pattern when you put in that 886. And that becomes, for me, the reversal zone based on all of the things that I use. So that's where I think we still potentially go, and we still go in that channel. Now, if we look at when we all line up there with this trend line and so on, that puts us there first, somewhere around the weekend, because this is only a 4-hour chart, doesn't it? So weekend, beginning of next week. So then we would be at the beginning of August at the top of a bullish flag. Are we going to then break out, or are we going to reverse and head lower and September be, another month of correction? To be honest, I don't know. We could do one of those declining wedge things, but that's where, that's my crazy reckoning of how we get there and what the harmonic pattern rules say. But the first problem, there's no doubt about it, the first problem is going to come from the daily moving averages and the measured move rules here. The first measured move rule, remember we said was 10,000, and that's the daily 20 moving average here. That's our first problem. And the second problem we said was what, 10,400? That's the daily 50 moving average. So we've got to get beyond 10,000 and then 10,400 for us to say, okay, we've got our 12,400, 12,600 target. But from here to here is $2,000 and 20%. So it's not to be sneezed at. We've just got to, but that's where the trend trade is, if you like. Between here and here is speculative. Between above here, I think we can quite confidently look at that target. So that's how I'm seeing Bitcoin this morning, and the harmonic pattern aspect. So what does Lisa Hamilton Smith says? Well, in the lesson files, there's a bunch of lessons about Fibonacci patterns. And basically, they're patterns where, when you use fibs for retraces and projections, they're the patterns that form when everything lines up at the same place. And they have a few names for them, okay? And a Gartley pattern is probably the most famous because it was the first one to be discovered. It was discovered in 1934 by a chap called Gartley, who wrote a book at the time. To buy his book that described the pattern, it was the equivalent of buying 2 really expensive top-of-the-range cars today. That's how much people thought. But basically, he didn't apply the fib rules weren't applied to later. He just would basically draw a pattern that he saw that would repeat in the market. And it was basically, in a bullish one would look like this. We would have a pullback, a rally, then we would have a pullback like this, and then another second rally, and then a second swing. The best ones were when they were equal, and then it would carry on. And he described this pattern and made a lot of money. Okay, so for a Gartley pattern, which is a trend continuation pattern, there's a few features. First of all, when you draw your pattern like this, I'm just going to quickly, let's mark in the important levels in red here. Actually, we don't need that. Okay, so here's our rally, and I need to put these on the left so you can see. Hold on. There we go. Okay, now people say if you have a Gartley pattern setting up, if your first swing comes to the 61.8 and you have a bounce, then then you're looking for your second swing to terminate at the 786, and you're looking for this to be a fib projection of here to here. So you would want to see it line up with the 1.618 or the 1272 of this swing. Okay, and the way that works obviously is with the rules. Let's do that. You know, when you bounce at a 61.8, you either bounce to the 38.2 or back to the 236. Well, if you go to the 38.2, it lines up with the 1.618. If you go to the 236, it lines up with the 1272, and that's how those ratios come about. And the best ones have equal swings, and that would then be a bullish Gartley. If you got reversal price action here, that would be a long, and you would be looking for a new high. So that's what a Gartley pattern is. And the other ones are kind of variations of them. So a bat pattern, for example, when your first swing only terminates at a 50%. You know, there are a few patterns you could be looking for, but very often if you see a deep retrace like an 886 on the next swing lower, a bat pattern is what you're looking for. So let's see. I mean, it's just one green candle so far today, and you know I know our Fibonacci have changed, but we've got a lot of overhead resistance with these moving averages. So let's not underestimate it. So 10,000, then 10,400, and then if we get out of this zone, potentially we're looking up there 12,200 to 12,400. Okay,